Stacks is obviously known for locking your stacks, earning Bitcoin. And then earlier this year, we introduced sBTC rewards just by holding sBTC. Can you maybe talk about the biggest change that dual stacking introduces now?
Sure thing. As you mentioned, we launched sBTC in December of last year, and that product was really well received from the market because it was a very easy way for people to participate in sBTC and start really earning rewards. When we think about the evolution of sBTC and these sorts of yield products on stacks, the main difference is that with dual stacking, it aligns the incentives a little bit more nicely with the value and growth of the underlying stacks network. And people can still earn a base yield by depositing Bitcoin and minting sBTC. That yield, we project to be around the 50 basis points level roughly. And then by staking STX alongside your sBTC, it makes you eligible for a higher multiplier on your sBTC rewards. And the maximum multiplier is 10 times the base yield.
Seeing it in front of you is very useful. So part of this product is really launching a dashboard where you can play around with different multipliers. Would you like to talk about how the dashboard is going to look and what people can expect?
People will be able to connect their wallet and see all of the Bitcoin rewards opportunities directly in one place. So as a user just coming to the site, the first thing that you would do is mint some sBTC. That's kind of the first step to start participating. And then you would enroll your wallet in the dual stacking contract. This doesn't lock your sBTC or anything. It kind of just informs the smart contract that it should include your wallet in the overall rewards calculations. So in that sense, your sBTC stays liquid during that entire time. So you can use it for other opportunities across the Stacks ecosystem. And then, this dashboard will guide you through the various ways to basically start stacking and feature different DeFi opportunities. There are different tools like calculators where you can really kind of project what your yield is going to be given how you're participating in dual stacking, and then different sorts of portfolio and reward tracker tools as well.
Can you maybe expand a little bit on other Bitcoin layers or even projects on other networks that talk about staking your Bitcoin and compare this dual stacking to some of the other products that are in market?
I often get asked about Lombard and LBTC, as well as Starknet launched a new staking product recently. Each of them have their own kind of like flavors, what they've built for and optimizing for. At least for sBTC and dual stacking, there's a few things. I come back to the rewards being denominated in Bitcoin. This is something that really resonates with investors from the conversations that I've had, where in each of these other cases, the rewards are distributed in the native token of that ecosystem. And so it adds a little bit of friction. One of the things that is nice about sBTC compared to some of these others is that your sBTC remains liquid as part of it, so you can use it in DeFi. And the rewards are distributed directly to your wallet every 2 weeks in line with a proof of transfer cycle length. And so that allows you to take that Bitcoin and be able to compound those returns by deploying it into DeFi and other opportunities as well. Underlying security properties of sBTC in terms of having a more transparent institutional signer network, I think that helps to add a lot of trust to the product as well. When you look at like other sorts of wrapped Bitcoin assets, some of the largest ones like a wrapped Bitcoin or Coinbase Bitcoin rely on a central custodian, which in some ways is antithetical to the Bitcoin ethos. And so we developed sBTC to have a decentralized validator network where basically you have a decentralized network of signers that are attesting to the deposit and withdrawal operations of the protocol. And it requires 70% of them to basically mint or redeem sBTC from the protocol. It reduces reliance on a single party. And we focus on having the best-in-class infrastructure providers of teams like Blockdaemon and Kiln and Chorus One and Restake and and others that have developed reputations as being really industry-leading infrastructure providers for this use case.
We've heard a lot this year about, Bitcoin treasury companies, and, they are certainly trying to earn yield on their Bitcoin and trying to grow their Bitcoin per share. Can you share a little bit on some conversations you've had and just how Bitcoin treasury companies might be thinking about a product like this?
There's a lot of Bitcoin treasury companies that are very risk averse. The game that they're playing is more so based around like financial engineering and really trying to grow their Bitcoin per share by essentially issuing more debt and buying Bitcoin with that. I think that there is going to be a lot of education to get some of these traditional Bitcoin treasury companies to start participating on chain. That said, I do think that there is a really interesting opportunity for some of these companies to start to earn yield by a product like dual stacking, because all of these companies are going to need a way to service the interest on their debts. And it's something that we're seeing in other ecosystems like Solana and Ethereum, where their treasury companies are able to participate in staking. They're able to grow their holdings per share at a faster rate and service the interest on the debt. Once it starts to click, the rest of them will follow suit.
Bitcoiners in general that haven't really interacted with the Stacks network too much, I personally am really excited to see how they receive dual stacking. What's your pitch to the Bitcoiner that hasn't used Stacked before, but has a lot of Bitcoin and is potentially interested in earning a little bit of yield on it?
We really have designed the system with flexible options for how you can maximize your Bitcoin yield offering. If you wanted to just mint sBTC and earn rewards from consensus, because that is probably the least amount of friction to participating, we have a product there for you. If you wanted to participate in the DeFi ecosystem and start to compound your holdings, then there are really easy ways to do that. The app kind of guides you through how best to participate. I really tried to design the system in a way that would allow kind of like the average Bitcoin holder to have a few different options depending on their preferences.
It's great to be like transparent and let them sort of decide, the risk reward, and everybody's going to have a different answer on what they feel comfortable with. So as long as you can have that transparency, it's great to let them choose that.
If you want to compound your Bitcoin holdings, grow your Bitcoin holdings over time, I think this is a good solution for you. Go check it out. We made it super simple to go through the process to participate in a few of the flexible ways that we talked about. This is the first version of the product. We want to know how we can make it a better experience for you and sort of satisfy the goals that you have to grow your Bitcoin.